Happy Tuesday, everybody. Stratton Mortgage here, Season 1, Episode 12. As usual, start off with introductions. I'm Tom Christie.
Bill Seach.
Trey Reedy.
Back from Mexico, Adam Baumline.
Looks a little Mexican.
Hola.
Got quite tan there, my friend.
Did they call you El Grande down there? That's what they called me in Cancun.
Big
El
boy.
Grande in the cab.
Barely even squeeze in those things.
Right.
They're so big.
Yeah, they're all like Yugos.
They're small.
Toyota Tercel.
Small
and stuff,
Toyotas.
Yeah. Pepe was the cab driver too. Pepe. What?
That's funny.
So a couple topics today. Tom, you want to start us off with number one? What we're going to discuss?
I was a scenario I wanted to run by was with a client that I was working with at talking with people, one of their first places to go, or their mindset is, well, my checking and savings at PNC, Chase, KeyBank, Huntington, whatever you have. But anyways, they had gone there, got a pre-approval. We're going over different loan options, and this is somebody with very good credit, a lot of assets, and Chase was showing her FHA loans, and there's a difference. We've gone over what FHA is versus conventional. FHA has more cost to it than conventional. You're typically what you're going to do is, by rule of thumb, is somebody with a sub 700 on most cases is going to qualify for most likely an FHA loan. But again, this case wasn't that, and I'd heard this discussion with the realtor of what was going on with the loan and what they were getting pre-qualified for, so on and so forth, and I couldn't stand to sit there in silence anymore and listen, knowing what I know. So I get the contract, start going over it all, and it still befuddles me to wonder why this person never even educated this borrower on why conventional might be a better option. Monetary value-wise, it was $53 cheaper a month to take conventional versus FHA. On top of that, she didn't have the 1.75% funding fee that goes on top that FHA has with every single loan. So right off the rip there, we're talking, around probably $2,000 just in month number one, just by no FHA funding fee and then the monthly savings. And Trey made a great point last week, knowing, seeing what people do for a living, and, I don't know how many people would say, I'm going to go and work this week for free. I mean, I don't think any of us would ever do that. Anybody, the listeners, would never say, I'm going to go to work for free, or maybe 2 weeks for free. And to put this in perspective, and again, I'm just continue to give Trey, because he brought this to my attention. This would have accounted for this gal to at least several weeks of work for nothing.
Lost wages.
That's
not lost wages, but yeah.
But try to look at it in that manner. And it's one thing, because buying a home is a lot of emotional purchases. You get so excited, and a lot of things kind of you start to lose a little bit of the let me look into this a little bit more, because you can get pre-qualified, and man, this is great. The payment makes sense. Great. Now let's go into this a little bit deeper here. Now all of a sudden we're talking about thousands of dollars more that you're going to spend on a loan that you don't need to. Had I not been there for that conversation to hear this, she would be spending several $1,000s more than what she needs to. And somebody that has worked years to save up all this money that she has saved up. She is a child. That would have been gone. Again, then that's weeks of work that she would have then lost. And like I said, I go and put that back on other people and say, no, you work a 40-hour week. I'll tell you what, you're going to work actually 80 hours this week, but we're only going to pay you for 40. Who's going to say? Who's going to do that? So that's why we always suggest you people have got to you can't go with the very first person, and you got to do your research and ask questions. And that's the big difference between wholesale and retail there's a small number of people, but I would say by rule of thumb, from my experience, and actions can speak louder than words, but most people I talk to who have worked with a retail bank are not getting the information they need. And I will say that every single person I've talked to that's worked with retail bank, within 30 minutes of talking to one of us, is way more educated in that 30 minutes than they have for a week of talking to their local bank. I mean, think about it.
Depending on who they talk to you, but you're right.
Again,
if it's somebody who's new or whoever, just doesn't know.
You were in retail on a monthly basis. How many loans did you have your hands in? Probably 50, 60 different loans, whereas a broker, you might have 10 to 15. So there's a big difference. You have more time to talk to your customers, more time to feel them out, more times to see,
they don't get paid. Yeah, they're getting paid a much smaller margin for the same loan because there's
to deal with this person's biggest investment they're going to make, and they're not going to take it nearly as. And again, you can put this all in a vacuum, but I know I would say like we would take more care of that person. I can say that without question. Knowing the service that we provided people, the way we educate people with this investment. You're not buying a car, and I always tell people, Trey and I talked about it. You don't want to be looked at as a number in the system. And what's your loan number there? Let me look you up here. Like, well, no, my name is this, and you're working on my house to obtain financing. That I don't know, those things. It's not my money, but at the same time, watching what people have can be taken advantage of, and not with a lack of knowledge. And maybe in his defense, maybe he didn't know the difference. I mean, I can't really speak for him.
Well, no, what we talked about before we started recording is, so a lot of times at, a larger institution, so they're going to fluctuate their interest rates based upon how much loan volume they have, if they need loans or they don't need loans. So, and we don't know for sure, but I'd say odds are probably on that given day or given week, they were very busy with convention, they were full. Mm-hmm. So what they raise their rates
to slow down
on the conventional loans to slow down the number of loans that are coming in. And the first time, any buyer not necessarily going to know that, if they're not asking around. And, not everybody's rate is exactly the same, and, nor does it need to be. But if there's a big difference there, and now they're – so in that case, first of all, we can't even do that. We're not allowed to steer somebody into a program that's not beneficial for them versus another one.
Well, to your point, it doesn't matter to us. I could care less whether somebody does FHA, VA,
we get paid the same.
It makes no difference. So all we do is make suggestions, and here's math to prove this, and here's why I'm making this particular suggestion. Because we want people to be in that best loan that they possibly can get qualified for.
Plus, think about it. And you even touched on this, but think in our market, it's a seller's market. Yeah. Now you're trying to compete with an FHA loan in a seller's market.
Oh, she wouldn't have gotten the house. No, you're right.
You're putting in offer after offer after offer. It's not working.
They had 8 offers.
Yeah.
That's a great point. And again, no offense, but that's the way FHA is. If you got 6 conventional in there, and we have an FHA, that FHA is the first one to go by the wayside.
Yeah, more than likely. Yeah, it's just that's just the way that it is. Just there's some stuff with it. So that's a big, or could be a big difference for her. Yeah. And you go back to time and working right. Hey, Joe Realtor, I got to go see this home today. Okay, I got to go FHA. I'm not getting my offer. Potentially, right? Now she's taking off work, or now she's not taking on extra clients or whatever, or
snowballs.
I don't know. She's got to keep her son in daycare a little bit longer. The point of that is all those things are costing her money because she's not being put in the proper position.
Yeah.
To give herself at least the best opportunity, right? Now, just because she's got a conventional offer, that doesn't mean she's going to go win offer one.
Yeah.
But she's at least going to be. That's why we tell people, hey, listen, we at least put you at the top of the pile. You don't know what the seller's thinking, and you might have the highest conventional offer, but who knows? Somebody throws some crazy term in there. They really want the home. You don't know what the seller's thinking, but at least you're in the top. At least you're not in the bottom where there's no way,
Yeah. And I mean, I saw an article on Facebook with Housing Wire talking about, why brokers are a better avenue for home buyers. Like that's really where you need to be looking. I mean, it's what we do. I mean, we're not figuring out checking the savings and trying to, we have a 5-year CD here for you. Like, we're doing mortgages, and that's it. And that's what we specialize in.
Well, that'll go along. Okay, so you can take that with our market, too. Prices are going up, right? More competitive market, seller's market. Our rates are lower. Yeah. You can afford more house for the same amount of money. That could make the difference between somebody getting a home and somebody not getting a home. You know what I mean? That could be
and less. There are less overlays. When we say overlays, that Fannie Mae, Freddie Mac, Ginnie Mae say, "Hey, here's what we need," and our lenders say, "Tell you what, if Fannie Mae says that, here's what we need is that." And these banks, to protect being publicly traded companies, they have got to report to their investors, and they've got earnings reports, which if you follow that stuff, you see that. So that bottom line needs to be bigger. So they're going to take less risk on a loan and have additional things that you need and hurdles, if you will, to jump through to satisfy to get a loan closed that otherwise you don't need to do.
With the higher rates, and we'll when we get to the deals of the day, that just reminded me.
Yeah.
Should have thought about that earlier, but that just light bulb went off there, so I got one.
Yeah, and then let's talk a little bit about values and appraisals, and if the appraisal comes in short, what happens? Because that's something that came up this week where, there's people bidding on a house. They can bid as high as they want to bid, but guess what? If it don't appraise, they're not getting that deal. And I think that happened on one of your deals, right?
Yeah, I'm experiencing it now. I mean, somebody could borrow simple numbers, say $100,000, and you can have a person walk in and say, well, I'll put an offer in for $200,000. I mean, well, what's the point? It still has to appraise. Who's going to spend an extra $100,000 on a house if it only appraised out at $100,000? So that
I think we've actually seen some people spend about 50.
I can't believe it.
Well, but that's
which is to me is crazy. To maybe they really want the house, but I know what you're saying.
Certain areas there are one-off situations where there are people, and again, I think that's okay. But a middle unit condo, that's not going to happen. It's not.
You got a whole complex. They're all this there's not going to be that much of a difference.
But but a realtor that's seeing these offers like, oh, we got one for 160, we got one for 170, and if that's somebody who doesn't really know what they're doing, that's again, what's that? It's worth nothing, because when the appraisal comes back short, now what are you going to do? Now you got to go back to the table and figure out
if it's cash.
Yeah. Well, there's a lot of ifs for sure.
Yeah.
But again, it's. At the end of the day, even cash offers, typically somebody might be getting an appraisal for their own good, because you don't need an appraisal for a cash offer. I've done it. So you don't, and that's their own doing for appraisal then. And that guy with cash offer is probably well off and smarter than that. He's not going to do that.
Yeah.
He's buying out the cash for a reason.
I had one, and you might have missed this last week, but my guy offered $402 on a house, and the guy went all the way up to the other guy went up to $426. There's no way that house is appraising for $426.
Yeah,
you know what I mean. So,
the whole point
now
of
some
all
of them
this
will
is,
know though. So we've
that's right.
Some of the agents that we've worked with or worked with a lot will know, or will say, listen, it's not going to appraise. Or what they'll do is they'll protect them and say, hey, like I've got one right now that just went a contract where, hey, buyer's willing to pay X amount of dollars over appraised value if it doesn't appraise.
And that's exactly what I was
that way
to.
there's.
And that's what we did.
Yeah.
And that's why we won the offer. And we may have had the lower offer, but our verbiage was the only one of those of the 7 or 8 contracts that came in between the 125s and the 130s was the only one that came in and said, we're willing to pay up to $2,000 over appraisal that comes in short. So, which means that we are now guaranteed to, that means that person's resetting that market, because they are going to be the highest sale in that area now, because the house didn't appraise out because of what everything else is sold for. But because of that verbiage is what helped her win that offer. Or
if it's close, sometimes you get an appraiser who's just not going to.
Yeah.
I mean,
I'll be honest with you. The appraisal I got here, I was surprised he came at where it did.
You're good there.
He definitely brought it in to try to help support what we had. Because, again, that's the other thing. And, again, I am a broker, and I've been my whole life. But I've seen it personally, that the appraisals they're more aggressive on our side.
That's actually something we can talk about. Is some lenders will pitch the fact that they have their own internal appraisal they still have to rotate the appraisers. They can't just say, hey, we're going to give every appraisal to John or every appraisal to Joe. They still have to rotate. They have an internal thing. That doesn't mean they can control the value. You know what I mean? Like it's still
based on what's selling in that area.
It's still based upon what's selling out of there. Most of the appraisers, I mean, we've used the same appraisal management companies long enough to where you pretty much, it's a rotation, but you see the same names all the time, right? Like like, okay. And I know there's very specific appraisers that I've actually, written thank yous to, like, hey, listen, I know you have no idea who I am because it comes through a management company or whatever, but you do a lot of my appraisals or get a lot of my orders, and I know, or I'm pretty confident at this point, that if the value doesn't come in and he's doing the appraisal, it's not worth it. Well, it's not worth the property's not worth it.
Yeah.
Because I've seen so many of his appraisals and so many things of what he's done and so many times now.
And he put the effort in to probably try to find that, because again, there has to be something there to support. I mean, again, you can't, if everything's only selling for $100,000, how could somebody? And this is exactly what caused the crash, or not exactly, but one of the main reasons that caused the crash is, well, everything's selling for $100, and an appraiser comes in, well, it's worth $160. Well, how in the heck did you come up with that number when nothing in here has ever sold for that? And just so people can pull cash out, and then next
remember
day,
the same pictures. different address numbers.
Oh, yeah.
wow.
I think I've seen that house before. You're like, what? Okay.
Well, they're an integral part of the valuation system, aren't they? I mean, they're kind of like the front line when it comes to.
Yeah.
Yeah,
You know?
and they're the ones that got. Unfortunately, the ones that got blasted probably the hardest, and there's.
Yeah, and
They're not the only ones to blame. You know, what I mean, there's a lot. It was all
same
kind of a
token,
full
too,
circle.
It was they were threatened. I mean, we've seen it.
Oh,
like,
I've
hey,
seen
if you don't come
firsthand.
in with this, then you're not getting any more orders from my office. I mean, then what's an appraiser's like? Well, now I'm going to starve.
Yeah,
so,
or I'm not
you know,
getting. Or I'm
they're
not paying you.
forced to do things and twist your arm, and everybody can sit from this side of the table and say, "Well, that's still bad." But put yourself in that shoes for a second and say, "Tell you what, if you don't do this, you're not eating." That's how the industry was back then, which is exactly why we have management companies today. And that's what a lot of people don't understand is, well, maybe you manipulate it. No, we can't. We're not talking to appraisers. We're not allowed. It's ordered through a management company, and they find that appraiser to come in with their non-biased opinion of what that data shows and what that house is worth based on condition, and it's not ran down. What is everything else selling for? So, again, if it comes in, but again, at the same time on our side, I really feel like they take a little extra steps to find those values. And if it's there, it's there.
Well,
if
there's
it's
not the
it's
overlays. It's the same thing. There's not overlay. The bank's not coming back and saying, well, we need comps within this range and within this time frame. You know what I mean? And then they can't find it. And so what is there? Maybe it's a smaller home. So of course it's not going to adjust up as much, right? You know what I mean? It's just not. It's not going to be worth. So it's going to come in low. I mean, it happens.
This particular one, albeit it did come in short, but it still came in higher than what the original asking price was. And my comps were from 2018. So, because but that was allowable. I mean, that's what helped support the value. So, I mean, it still came in over what the original asking was. But, we had to put the offer in where we did just to stay competitive because everybody else was throwing out crazy numbers out there that we knew were never going to hit. So, the people still sold their house and still made $4,000 more than what they actually asked for. So, but it gets back to the point where, some people just start getting up in arms and they don't understand how the process works. And that's when it becomes an issue. Like, what are you telling an appraiser to overappraise this house when it's not there? Like, that's not right. Like,
it's the same thing as underappraising it. You don't want a low appraisal, right? That's not fair.
Yeah.
Well, neither is an over an appraisal because it's not.
But if it doesn't situate their needs, then now it is a problem. So, and that gets all the way back to, again, people not understanding the entire scope of the industry that they're working within. And that is where I have a problem personally. And half of them don't care. That's what really frustrates me too.
Yep.
But again, I get a little heated on
now,
some of these things.
If you're a builder,
sometimes.
you're always getting the value, right?
Yeah.
Not to go back to that discussion from, I think, episode 2, maybe.
Something crazy.
Oh gosh, yeah. Remember that? Yep.
Yep. So, all right, moving on, right?
What we got next?
I wanted to do that. What was that deal? You were talking about your FHA deal. That was good news to me.
Oh, yeah.
And
Oh, yeah.
So I guess you got two. I got two. Yeah.
Oh, yeah.
How about those jackets? Yeah.
Had 2 deals of the day. So I've got a purchase right now. FHA, primary residence, of course. Non-occupant co-borrower. It's their dad. So I get everything in, and actually another broker had referred it to me, broker in Michigan, not licensed in Ohio, said, hey, I need you to take care of it. Of course, we're not licensed in Michigan, so we can refer things back to him. It's nice. We have those connections. We've got people pretty much in any state. So if we have listeners that have a family member or somebody like that in a different state, we can't help you directly, but we can put you in contact with a broker that's exactly like us, that's going to give you the same service and, the same rates and everything like that. That will help you out. You don't get compensated for that, but it's just, hey, we're going to help you out.
Yeah.
We're going to get you in contact with somebody that can. Anyway, so they're purchasing a home here, Northwest Ohio. They live here in Ohio. This is primary residence. Dad's not going to be the non-occupant co-borrower. He has an FHA loan right now as his primary residence in Michigan. So, and I'm looking everything over and I see it and I'm like, oh man, we can't even do this deal. You can't have 2 FHA loans. So I call FHA up and I asked them and I said, hey, I'm not sure what the situation is. I don't think I can do this. What's the guideline here? So if you're a non-occupant co-borrower right now, or I'm sorry, if you have a primary residence right now that you have an FHA loan on, you can be a non-occupant co-borrower for somebody else's primary residence, essentially you having 2 FHA loans, or vice versa with that. If you are a non-occupant co-borrower right now and you're renting or whatever, you can go buy a primary residence and you can do an FHA loan. Huh. So I didn't know that. I thought that was pretty cool. So I called. Now I went back to lenders and said, hey, I just want to make sure you don't have an additional guideline or overlay, here on this. Said, nope, that's FHA will take it when we do it. And I already have the FHA case number assigned for that. So that's pretty cool.
Clearly you have to have the ratio to work both, though, right?
Yeah, they have to. Yeah, it makes runs approved eligible. They have the ratio to work both. But I mean, that's we're learning new stuff all the time. We don't know everything, but we have the resources and the ability to find stuff out and ask. We're 15 years in. I didn't know that.
Right.
And I didn't think I could do it. I was like, oh, remember I came to your guys' office. I'm like, man, I can't even do this.
It didn't sound like something that you could do.
Yeah, I'm like, oh man, I had this thing all ready to go, and I finally, get all their docs and everything, and I pulled it. I'm like, man, this guy's got an FHA loan already. But you can do that, so that's pretty cool.
That's nice.
My other deal today actually is a refi. So, and this kind of goes back to a retail lender having higher interest rates on government loans.
Yeah.
So he purchased actually less than 6 months ago. And part of the deal with the refi is, of course, rates have come down since he purchased. So they are eligible for a VA loan. He's self-employed, can't show his income, so we can only show his wife's income on the loan. She's the veteran. She's exempt from the funding fee, so there's no funding fee, right?
That's nice.
Now, they did put 20% down. So
it's even reduced
with good credit. So they said, hey, you can't qualify for a VA loan with us. It doesn't run approved, eligible. You have to go conventional. Okay, not the end of the world. You know what I mean? And maybe it, probably didn't because their rates are higher. Still putting 20% down, got a conventional loan, but rates were higher at the time. Well, now the rates are lower. He actually another referral from a broker, actually a broker from Maryland, said, hey, can you help my friends? They live there in Columbus and, actually Delaware, but need some help. So we look at it. And now I had to go read because the FHA changed, or VA changed all the refinance guidelines. So it's I think it's a type 2 cash out. He's not taking any money out, but he can't raise his loan amount over what he originally borrowed. But now, because our guidelines are less restrictive, the debt to income ratio is higher, but it still runs approved eligible, and they still meet the residual income guideline. So now he can he's taking his interest rate down almost 0.75%, and because it's VA, we don't have an underwriting fee on the loan with them. There's no funding fee, so he's got the appraisal and the title fees.
Is there MI on that?
No, so yes, there's no MI. Well, they were under 80% anyways, but so they got to set up a new escrow account, but he's gonna get escrow money back, pretty much a wash or whatever. I said, well, if you do this, now's the time to do it. Your skip payment, essentially in their case, pretty much pays for the title fees.
Yeah.
So when it's all said and done, costs you $400 or $500 probably out of pocket, $525 for the appraisal out of pocket, and your interest rate goes down 0.75%.
Yeah, so you recoup that in what, probably
almost immediately. Yeah, almost immediately. So that just goes to show where that's a situation where our government rates being lower, he didn't qualify it. They didn't qualify at the other lender with the VA because because of their overlays and or because their rates are a lot higher.
Yeah.
So it pushed the debt to income ratio too high to qualify. Now in that particular case, not like I said, not the end of the world because they're doing a conventional 20% down. But now he has the opportunity to make his payment even lower than what it was. Plus, not a huge deal, but and we don't know what rates are going to do. But what if rates somehow took a big dive again? He can do a VA IRRRL.
Right.
He could refinance again and get his payment even lower. I mean, that'd be a pretty big drop. Who knows, right? I mean, you don't know.
Well, you don't. Yeah, you don't. I mean, at one time we had rates in the mid to low 3s on government. And that's not to say it can't get back there again. So, but to your point is when that does happen again, the opportunity is there for him to, hey, let's go ahead and lower that interest rate because you don't do income. It's a mortgage only credit. There's no appraisal. It's seriously the easiest loan to get done. I just closed one 2 weeks ago, and there was really nothing to do on it except sign papers and send it in.
Yeah, sign and wait.
Yeah, you do. Yeah.
Government's going to make you wait this many days. You got to wait this many days.
And we do the due diligence. We get the certificate of eligibility, so we work with the VA portal to get. And again, back to us trying to keep life simple and people who have 40-hour-week jobs to not just pass everything off on you to take care of. So that's what that's what we do.
Help you get that information.
But even back to the rates, when our rates are a little bit lower, even on these the jumbo loans, you might be able to buy a $400,000 house at a Chase or a PNC, but if you come with us, you might be able to go to $500,000. People don't realize that until they call and make. Well,
that's even a bigger
choice.
To your point, that's a bigger discrepancy there because we can do high balance rates that would be considered jumbo anywhere else with local banks here.
Exactly.
That's a big difference. You're talking.
Yeah.
A lot of money difference in payment there when you're talking about a $500,000-$600,000 house.
Right.
Yeah, I mean that's hundreds of dollars less a month here.
Yeah, it could take you to what well, we talked about it a couple weeks ago, but I had that they were looking at one of the doctor's loans. That nationwide high balance was better pricing,
right.
So they got a better deal, lower rate, and it's a conventional loan. So boom, got the offer right away. Of course, that was in UA, so it was
easier.
Yeah, it's a tight market. It's kind of different level of clientele. So just those advantages with things being lower. It can, not everybody, but it can open up the doors, to make things easier for somebody or less credit restrictions, stuff like that. There might be some things that we can get somebody into a home where, especially if you look at the lower tier credit scores for FHA, VA, and USDA, maybe they're getting seller pay closing costs. Maybe they're doing a down payment assistance program. They're already tight on funds anyways. Now you're going to throw a $1,500 underwriting fee on there? Every retail bank, when we may not have one at all, or maybe it's $500-$800. That literally it goes back to the work. That could be a week of work for that person.
Sure.
Yeah.
A difference in that money, or getting or not getting that property because the seller may not give them that money. So those things do matter.
Absolutely.
So yeah, moral of the story: if you are looking to buy a home, you need to contact a broker. Preferably give us a call.
Yeah.
But at the same time, do your due diligence, ask your questions, know what you're getting, know the difference between FHA and conventional, and why you would want to go one way or the other, not just, well, this rate says that and that rate says that. Well, there's way more to it. And how many times have I said this on these shows? There's way more to this than here's a 30-year fixed rate mortgage for you. Let's start getting paperwork done. You need to understand this asset. Where's the money going? Because again, when you're spending hundreds of thousands of dollars, in 10 years, if that thing could be paid down to $90,000 or $70,000, I'm quite certain everybody would want to take the $70,000 balance versus the $90,000 balance in that same time frame.
Oh yeah.
With the same payment, it's just there's ways to move that asset around. And again, but you got to know.
I'll take the higher balance, sir.
Tom drives 3 miles to buy the more expensive gas.
Yeah.
That's the comparison he uses. If you go to the next block so you can save money for gas, well, yeah, you do, right?
Yeah.
And that's,
even it's down the street.
2 cents a gallon, 3 cents a gallon.
And people will drive.
You're talking not even $1.
Right.
Yeah. And they'll brag about getting that cheap. I just found gas for $2.20. Like, it's $2.25 right next door to you. Like, you just wasted that 5 cents a gallon drive, but I got it for $2.20. But here we are offering chances to save thousands of dollars with a phone call. You don't even drive anywhere.
Right.
It's again, just you don't know what you don't know, and that's again. You have a job, and we have a job, and that's what our job is here, is to help educate people on this asset that they're purchasing, and the different avenues that and options that you have, and then you can decide when you look at that math what avenues.
Well,
best.
you can double check with us too, right? we can tell you, hey, it's.
Yeah, in some cases.
Some cases you're getting. I'm like, well, like the one that we talked about, where unfortunately we can't do it because of the zoning, and by the grace of God, the local community bank has a really good portfolio loan. But I actually called him and got all the terms, got the fees and everything, and said, hey, look, this is a good deal. If you really want this home, this is the way you're going to have to do it. We're not going to be able to, well, you can't get a conventional loan, period. So.
But we offer portfolio, and
we
you
do
could have done the
offer
same thing.
portfolio,
But back to the same, it's not all the time are we the best. More times than not, we are.
Correct. Yeah,
The
but in
cases
that
are
particular case, that was like kind of a local, unique thing in Eastern Ohio, in a little area where it is what it is. It was a better deal for them by far than what we could get to them. I said, look, here. This, if you want the home, this is, I'd love to help you, but this is really what you need to do. And they just got married yesterday. They're going on their honeymoon. Now they got to wait to close, but
credibility is worth more than any loan.
Yeah.
I mean, and again, if we are bold enough to say, hey, there's a better deal, and somebody shows us, hey, here's what they're offering, and it's something we can't beat, we will tell you that's a great deal.
Yeah.
And I've even tell people, like, as you're going along with this, to make sure they deliver on this, call me. I'll help give you questions. I mean, our ultimate goal is to make sure you're getting a good deal. Again, if that's not with us, it's somebody else. I still help.
It's rare that it's not with us. But again, there's not one lender that does everything that's the greatest all the time, and whatever. But we do try and be in a majority of the time.
Yeah.
We're there. So, but I mean, that's a situation where, we're still able to help out. Yeah. So.
Cool.
All right. Well,
anything else today, boys?
Well, go Jackets. That's going to be
a big night.
Going to be crazy.
It's going to be awesome.
If you're going downtown, don't drink too much and have a good time.
There is on the news. There's one guy that lives in those arena crossings. He's got a Bruins flag hanging right above our bar.
Is
right
it Dave
down
Ernest?
the street.
Is it Dave Ernest?
No, Dave's don't live there. Dave's a little nicer than that. It's kind of funny they had it on the news. So there's one guy and they couldn't figure out who it was, but it's kind of funny. So there's one, I don't know if it's a guy. There's one person, I should say.
Right.
One person that has a Boston Bruins flag hanging in the alley right above our bar. Is kind of funny.
Wow.
Right down the street from our bar. So.
Good times.
Yeah. Big game, man.
It's like that one house that you drive past on your way to the Ohio State game. It's got a Michigan flag up front, and you're like,
got to be that guy.
You mean you don't stop and burn it?
Rip it out of the ground?
Right.
No, we don't do that type of stuff. Anyways.
All right.
Well, we appreciate everybody tuning in. If you've got any questions, pound ash Stratton. We'll
check our Facebook page out.
Like us on Facebook. Follow us on. You can find us on LinkedIn, Facebook business page. We do put some stuff up on there. Follow us. We can definitely help you out.
Cool.
Have a great day.
Awesome. Thank you.